Thanks so much for watching AM Northwest. Okay, how do you know when you're financially ready to retire? Here with advice, we welcome back financial planning and consulting specialist David Swanson. Good to see you, David.
You're welcome.
So let's talk about this. How, because the shift from earning wages to going to retirement savings is kind of a difficult one, isn't it?
Well, it's the biggest transition that most people make in their lives.
Right.
And most of our retirement income is made up of really three things. It's Social Security, pension, and then all the other money that you saved in your retirement savings, your 401k and any duplexes or any other savings that you have put together for yourself. So we know that Social Security is in trouble. It's now we're finding that pensions across the country are really in trouble. In fact, there's about a $5 trillion underfunded pension liability right now across the nation, which, to put that in perspective, is about as much money as the whole entire economy of Japan.
Oh, wow.
So it's huge.
Right.
And some states are really, really in trouble where pensioners are really at risk of going completely insolvent. Like, for example, Kentucky, they're estimated to be only 16 cents in every dollar needed to fund pensions for the rest of people's. Chicago, about 30 cents. The states of Oregon and Washington, we're not in such great shape either. Oregon is around about 30 to 50% underfunded. And that means that the burden of you providing for your retirement savings falls squarely on your shoulders, okay? So now we've got Social Security, pension. The only thing you got left is what you have. So what we find is that as people get close to retirement, they don't manage their money very well. And they don't talk to their advisor. They haven't talked to their advisor. They haven't looked at their statement. They take too much risk. And in this market environment,
now is not the time to be taking the risk,
oh my
right?
goodness, look what's happening with the technology market and what's happening overseas. Chinese market's off over 20%. Things are really fluctuating. We got tariffs. We have all kinds of different things to be concerned about. And right now, if you're getting ready to retire, this is not the time to turn a blind eye to this.
You know, you mentioned pensions. There are a lot of businesses that don't offer pensions anymore, kind of across the board.
Absolutely, and you know, almost everybody had pensions, 40s, 50s,
Right.
Our parents all had pensions. And companies went away from that because it was too expensive. They shifted the burden to you, but most people have not really picked up that end of the log because
Right.
they just put money in and they don't realize. Some people have come into our office and their money is like completely invested overseas. Well, they don't know that their money was allocated into an overseas investment. It was just there, and maybe that's not the best place for them to be. Certainly taking too much risk too close to retirement is a bad formula.
And when you're close to retirement, riding it out isn't the way to go either, right? Because that's what we used to do in the past is, okay, we can ride this out. You're saying we can't.
Well, when you're 30, when you're 40, even when you're 50 and you got 10 more years to work or whatever, you have time to ride through a cycle. But when you're within a year or two or you've just retired, you don't have an opportunity to lose that money because you're turning that money into income. And if that money is gone, you're going to have to change the comfort that you have aligned for yourself in your future life.
So when you're looking at should I retire or do I have enough money to retire, one of the things I know you say is to make sure you write down what you have so you can figure out what income you will have.
You don't have anything unless it's written down. You just have some vague ideas about you think you want to go. And you know, a lot of people, you just wake up the next day and it's the next day and you just live your life and that's fine. But if you run out of money in 10 years, you're going to wish you would have planned out in the beginning what you had. So you have to write it out. You've got to take an inventory of what you have, figure out what your income is, figure out when you're going to take your income, and balance that with all the things that you want to accomplish in the rest of your life.
Right, because how you want to live your life in retirement also depends on what you have left. What kind of money you have left.
There's no question.
Right.
And you know, the two worst things that people can do is you spend too much money too early and you're broke in your 70s.
Right.
Or you don't spend enough money at all and you have all this money in your 80s and you don't have any energy to do anything.
Right.
So we want to balance between those two things.
Makes sense. Now, I know we have viewers who've sent in their questions, so you're going to stick around and answer some of those
Yes,
questions
I will.
for us. So David's going to stay with us, and when we come back, he is answering your retirement planning questions. Stick around. Thanks so much for watching AM Northwest. David Swanson from Swanson Financial is back to answer your retirement planning questions. So let's start off here. First question is, are these new tariffs on China expected to affect our stock markets?
They already have. We're a global economy, and we're already seeing effects of slowdown, build up of product at port. Meat and poultry is stacking up, frozen meat and poultry at our ports right now that should be going to China that's not. It's a mess, and it doesn't look like right now there's really any solution to this poker game that we're trying to play to renegotiate our rates with China. So we'll see what happens.
The next question is the recent tech stock meltdown, and it has FAANG here. I don't know what that means.
Yeah, it's FANG.
FANG, okay. The beginning of a correction in the general stock market.
So tech stocks, a lot of people talk about FANG stocks, which are Facebook, Amazon, Alphabet, which is Google, Netflix, and then Google.
Okay.
And so those are the kind of the 5 stocks, like the Dow Jones Industrial Average is 30 stocks.
Okay.
So these stocks led the market up. Well, last week they declined over 10%, which is in any book a technical bear correction. So that's moving into the wrong direction. Is this the beginning of a market reverse? The companies that led us that are moving down now? This is definitely something that you should be watching about, and we talked about in the last segment, is if you're taking too much risk and you're in these stocks, you've got to be paying attention to what you're doing.
Yeah, you've got to start paying attention to where your money's going instead of just letting it ride or letting the folks handle it and you don't know what's going on,
And if you
right?
don't know or you can't read your statement, a lot of people come in, they go, we can't even read our statement. We don't even know if we're making money or losing money. They're going, you haven't made money in a year. And if you haven't made money this year or last year, you're not going to do well in this market that's coming.
If you haven't made money this
If
year.
you haven't, because then, and last year the S&P was very strong, and this year's been pretty good, above average. So you should be doing very, very well. These last year and a half should have set you up for several years in retirement. And if you didn't profit in that, you really need to talk to somebody about it.
My current investment advisor is telling me to stay put in the stock market. I'm recently retired and currently have all my savings in the stock market. I'm worried. Can you give me a second opinion?
Yeah, absolutely. We see people like that all the time, and that's the number one answer. There's the 5 questions and then 5 answers, and one of them is stay the course. Let it ride. Those kind of things. Don't worry about it. It's a cycle. It'll go through. But your life doesn't go in a cycle. Your life goes in a straight line. So when you're retired, you have to depend on that income. And if you lose a big portion of your money because you took too much risk, it will change the way you think and what you want to do in retirement, and that's just not acceptable.
Right. Should we be worried about future reductions in Social Security? We are about to retire.
There's no question there's going to be adjustments. We've seen a $70,000 removal of husband and wife spousal Social Security benefits that started from the 2015 Bipartisan Act, and there's more to come because Social Security is in trouble, and we have to make some changes, and it will only be those that will have to give up, and it just depends on where you fall on that scale.
Okay. My company is planning on stopping or freezing our pension plan. We were just talking about that. How much should I be saving to be secure in retirement?
Well, this is a huge thing. So it's all relative to where you are. You want to be debt-free. You want to pay your mortgage off, of course, all your credit cards, your house, your cars. You want to be in a situation when you retire that the money that you have coming in, you get to consume all of that. So it's very, very important to have a plan and figure out how much you can not only reduce your debt, but also put away in savings. And you got to do that, before, because once you retire, you don't have any income. Now you're in conservation mode. You have assets that generate capital and income, and now you're working off what you've saved. You've got to save it before you can spend it, and that's what you need for the rest of your life.
And you suggested when folks come to see you, both husband and wife, spouses come together, right?
You really, because a plan has to be a combination of 2 people's thoughts. And we actually give a questionnaire, and we ask you people to fill it out separately, and you will find very different philosophies between husband and wife, and those philosophies have to be woven together, or you will not have a plan that will be successful. So we were able to help a lot on that.
Oh, good. Let's tell folks if you'd like to find out more, contact Swanson Financial at 503-603-9900. We'll put that information for you on our website at katu.com. David, thank you very much.
You're welcome.